Joining me right now is Potomac Wealth Advisors President and founder Mark Avallone. Mark, let me kick this off with you. Yesterday, that big rally, as we got the word from the Chinese Communist Party that we're supposed to have a bull market, retail investors started opening accounts in China, and that led a whole global rally. What's your take on what took place?
Well, that's a continuation of central bank involvement that we've had in the stock market for close to 13 years. Investors respond favorably, and there's no reason for them not to when you have the dual impact of monetary and fiscal policy really urging stocks higher. When the Fed and other central banks step in, they're huge engines behind an economy or global economies at this point. And it's also taking away other alternative investment choices. Where are investors supposed to go when the 10-year is just hovering north of 0.5%, which is less than inflation? So that pushes people into stocks. It might be creating some froth, especially in some of the growth names, at least in the short run. But until the Fed gets some discipline here, until the even U.S. government, Congress stops these relief efforts, which are needed, of course, but until we see an end to that, we don't see stocks falling through the floor.
If you look at technology, if you look at banks, banks are going to be reporting earnings next week, and tech is really where the valuations have skyrocketed. Are you buyers?
Banks cause me a lot of concern right now. If you talk to bankers on the street, the reason we haven't seen as many write-downs and charge-offs is because of loan restructurings. When a strip shopping mall, commercial office property, anything travel-related has a debt on the books, they've gone to the bank, and the bank's given some sort of loan forgiveness and restructuring, and there hasn't been a write-down. When those occur later in this quarter or the following, then we're going to see the true weakness in the core economy, not the growth sector, not the tech sector we've been talking about, not the NASDAQ stocks. And the disconnect that John mentioned is going to be exacerbated, and it's going to be visible. That doesn't mean investors should run for the hills and pull from stocks. It just means they need to be selective. And if they want to be on the value side of the trade, they need to look at things like industrial, healthcare, telecom, dividend-yielding players that might be able to do well in a new environment, in a Biden administration or a Trump administration, whoever wins, and broadly diversify out. But I would not overweight and back up the truck to overweighted growth tech names, and I wouldn't overweight banks on a valuation play. I think they're a value trap.
All right. We will leave it there. We will be watching that sector and checking out if it's a value trap. Mark, thanks very much. Mark Avallone joining us this morning on investing. We are just getting started this morning.